Thank you, Mark, and a big hello from London. There were a few interesting weekly patterns last week. In the currencies, there was only one in the markets I follow, a weekly key reversal up in the US dollar Macedonian dinar, which has seen no follow through higher, and indeed the opposite, with a lower in parts this week below last week's range. In the commodities, we had a weekly key reversal up last week in London white sugar futures, which started the week well with a rise on Monday, but by the end of that session, prices had fallen back within last week's range. I'll cover this more fully in my weekly sugar video commentary out last Monday, but in essence, it is because the market is still travelling along and within a November to date rectangle pattern. Likewise, we had a similar weekly key reversal up last week in the sugar white premium. But this I put down to the attraction the market has, especially on a closing basis, to the bright red neckline, currently at 97 3/4, to the 2025 base head and shoulders top pattern. The market not moving very much either side of it. I'll cover this more fully in my weekly sugar video commentary as well. Moving now to oilseeds and veg oils. And we had a weekly key reversal up last week in Chicago soybean futures. This has seen a somewhat tepid but positive follow through higher since, as prices move up along the rising dark blue lower time, which is currently 1061.5 of the December 24 to August 25 bullish Andrews pitchfork. It's not a perfect support, but it does seem to be guiding prices higher. Additionally, the gold long moving average, currently at 1053 3/4, is a little below this lower time, as well as the November 2020 low at 1045, and they have combined to be further support, if an imperfect one. Meanwhile, the flatlining mauve medium moving average overhead, currently at 1073 3/4, has capped prices since the end of last year, though that was being tested yesterday and again today. I will cover this more fully in my soybean complex video commentary tomorrow, especially as we seem to have formed a double bottom pattern, typically a bullish pattern, over late December last year and January this year. Over now to Chicago corn futures, and we had a weekly key reversal down last week, a quite dramatic move lower, such that we now sit just below the declining gold long moving average, currently at 435.5, but above the 50% absolute Fibonacci line at 425 even, which had stopped the fall. We are seeing a small and unsurprising reactionary move back up, a reactionary attempt back up this week, something not unexpected, but so far it has been muted. Further up, beyond the gold long moving average, we have the gently rising mauve medium moving average, currently at 440.25, and the significant November 2020 high at 439.5. I'll detail this market more fully in my weekly oilseeds and veg oils video commentary tomorrow. Next, and it is another oilseed, we had a weekly key reversal up last week, if only just, in Bursa Malaysia crude palm oil futures. This has seen an excellent break higher this week, such that it looks like the market may be breaking up and away from a recent small diamond pattern formed in November last year, and also from a larger complex reverse head and shoulders pattern formed between November 2025 to date. More on this tomorrow in my weekly video commentary. Finally, there was a weekly key reversal down in Chicago live cattle futures last week. This week we've seen nothing, as prices formed an indecisive doji cross yesterday, only a little above last Friday's close. As always, I'm happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London, and I hope you found these comments useful.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.